The more things change, the more they stay the same. And this is in the back of everybody's mind as we're trying to think about, are these 4-year cycles intact? Are things going to play out like they have played out before? And what's essentially going to happen in the short and long term? So to answer these questions, I had Matt Crosby, who's the lead analyst at Bitcoin Magazine Pro, come on and talk to us about why he believes that nothing really is too much different and everything is intact. Now, he does talk about how he would love to be wrong and he'd love to be the guy that calls it right, but the data does not support that. We've seen a lot of people in a lot of different places saying that because of X, Y, and Z, we're going to have an extended cycle, or we're going to see that Bitcoin will never have a Bitcoin winter and things will just be progressing until infinity. And what we're going to take a look at is a lot of the different factors that we see on Bitcoin Magazine Pro about what the data is really telling us and what it all means. So without further ado, this is me and Matt talking about why things are pretty much the same.
Yeah,
because I mean, everybody's got a different opinion of what's happening. Some people say, hey, it's gonna be a super cycle, we're never going down. Other people are like, you know what, it's gonna collapse tomorrow. And the next one is, hey, I'm Robert Kiyosaki and I'm going to predict the next depression, just like the other 29 times that I failed at doing so. So I mean, like, this ought to be good.
The thing is I would love to be proven wrong, and this time to be different. I'd love to see a super cycle, Bitcoin have these massive exponential rally to the upside, very minimal drawdowns, institutions just scoop up at every single opportunity. But ultimately, we haven't really seen any data that supports that. And I know it's a boring answer, but I'm a guy that just looks at numbers, looks at facts, and just has to use that as my base case. Anything other than that is speculation. So here we have this long and short-term holder chart on bitcoinmagazinepro.com. And what we're trying to look at is just the supply and demand economics of Bitcoin, because all markets, it's not just Bitcoin. The only thing that really matters, the only thing that really moves the market is the supply and demand. Who is selling, who is buying, and what price are they willing to do so? And what we can see if we just isolate to the short-term holders, we can see over the past few weeks, this has actually began massively increasing, which has been great. This has actually rallied us to new all-time highs. And this cycle's been a little bit different, a little bit more peculiar, we'll say, compared to previous cycles. So if we look at kind of 2016, 2017, we had this perfect bull market where once we really kind of kicked off, broke past the previous all-time high, short-term holders kind of piled in and they just did not stop. We rallied almost non-stop. People were just buying Bitcoin frantically, feeling FOMO. It was the first really retail-driven cycle. Whereas in the 2020, 2021 cycle, it was a little different. We had this big run up due to the one token, I believe it was, or plus token Ponzi scheme, then the COVID dump. And then after that, again, we have this big, nice, continuous run up in the short-term holder supply of Bitcoin. Whereas this cycle, we've seen two very distinct peaks already, and it looks like we might be about to make a third. We've had this cycle where price action has been very choppy, very boring, let's be honest. It's not very exciting when price is just going sideways for weeks or months at a time. And then we've had these big explosive moves. So we've already had almost like a triple peak cycle potentially, whereas everyone looks at the last cycle as a very peculiar cycle where there's this big double top. In this cycle, looking from a data perspective, we had the big run up to about $74,000. Again, a huge amount of retail participants coming in, new accumulators coming in and purchasing and accumulating as much BTC as they could. The supply and demand economic shift, long-term holders begin to take profit. Offload, of course, this is very healthy and it's very typical throughout a Bitcoin bull cycle. And then after that, we had this decrease in short-term holder supply. Now, this wasn't necessarily long-term holders reaccumulating. It may have been short-term holders now continuing to hold on to their Bitcoin, realizing that, hey, I don't actually want to sell this. This isn't a short-term thing. Maybe I'm now kind of understanding the long-term potential of this asset. And then once again, we had this big increase as we ran up to above $100,000. And very recently, like I said, we had this big, long consolidation that felt like it lasted forever. It was only really a couple of months where we had this long, drawn-out decline in the short-term holder supply. And now suddenly it's increasing again. We ran up to new highs, $120,000. And hopefully this can continue and we can see this trend continue to the upside. So hopefully, again, to try and fuel and propel Bitcoin to even higher highs and maybe give us this triple peak cycle.
Yeah. Hey, Matt, okay, so real quick, how do you define what a long-term holder is and a short-term holder is?
So this is actually one of those where a lot of people don't like the answer to this because people say, oh, well, I've been holding Bitcoin 2 or 3 or 5 or 10 years. Am I a long-term holder? The actual definition is 155 days. Now that might surprise a lot of people. We can see if we just scroll down here, it says 155 days or more. The probability of an investor holding Bitcoin increases exponentially beyond that point. So they're more likely than not to hold that Bitcoin for an indefinite period of time once they've surpassed that 155-day threshold. So again, 6 months doesn't seem like a very long amount of time. But again, a lot of people, a majority of people, when we get into these big exponential bull market moves, are just looking to make a quick buck. They're buying and selling in a very short space of time, in a matter of days or weeks. So once we kind of cross that half-year threshold, there's a good chance they're going to be holding on for an extended period of time. We're talking multiple months, multiple years, or even a decade plus.
Gotcha. Okay, so then we're taking a look, and this is just looking at short-term holders. How would we look like if we just do, click on that long-term holder and see what it looks like, and talk to us about this prospect and moving forward?
Yeah, again, so I kind of think this plays in nicely to the narrative of this time it's different. Of course, when we have institutional inflows, we have corporations like MicroStrategy, or just strategy now, I guess, accumulating tens of thousands, hundreds of thousands of Bitcoin. We have nation states talking about Bitcoin strategic reserves. Of course, there's going to be a narrative of this time is different. However, we are still seeing similar patterns in the long and short-term holders as we have done, where we see a lot of long-term holders begin to take some profit. And I think a big part of this is, of course, when we see hundreds of thousands of Bitcoin being accumulated by these institutions, or ETF buyers aren't necessarily institutions, but a big part of that will be 30-40+% will be institutions. And of course, the Bitcoin treasury companies accumulating aggressively, they still only account for a fairly small portion of the entire amount of circulating Bitcoin. So if you take the total amount of Bitcoin held in the ETFs, which I do have the data somewhere around here, it's about 1.2 million. If you look at the amount of Bitcoin held in treasury companies, so this is just strategy, but if we just looked at treasury companies, it would be somewhere around 900,000 Bitcoin, I think. If you look at the amount of Bitcoin held by nation states, it's about 500,000. If you look at the amount of Bitcoin that is being held by people that have been holding for at least 10 years, don't know where that chart's gone, I'll load it up quickly. So of course this is including Satoshis, million coins, this is including lots of Bitcoin that people lost in landfills and spent on pizzas and then lost the keys and etc. We're looking at around 4 million plus Bitcoin that is potentially being held by either holders that aren't readily willing to sell, or it's a lost supply. So when you take all that into account, it's a huge amount of Bitcoin. It's over 20% of the circulating supply. But that does still mean around 80% of Bitcoin is held by everyday participants like you and I, just normal retail buyers who are looking to accumulate Bitcoin, potentially offload some in the future, and of course are looking for a little bit of profit here and there. So when we get these big periods of distribution from long-term holders, again, it's very normal, it's very typical to have people taking profit, especially when a vast majority of Bitcoin is still held by retail participants.
Yeah, so on that last screen that you had, it looks like, as far as the short-term holders, it looks like we might be rallying up to potentially another all-time high. I don't know, because it looks like, and this is the thing that kind of scares me, because I look at this, and I think back to 2021 when we had all-time highs in April 2021, and then around November 2021, same thing. Some people would say, oh, it's a double top. And then we come back here to 2024, 2025, and we start to see like some double tops, maybe like you even said, maybe like a triple top. If that would be interesting if we come back to here.
Yeah, of course, 100%. And I think another aspect, especially with the long-term holders, is we don't just necessarily need to look at long-term holders, because there might be people who bought, a fraction of a Bitcoin back here. The really influential long-term holders are those that have been holding a huge amount of Bitcoin. The guy that sold 80,000 Bitcoin, all these big whales that have had billions of dollars in their holdings for multiple years. When they sell their Bitcoin, that really shifts the market. Although saying that, the guy who sold 80,000 Bitcoin, we had a 3% drawdown or something, really outlines the strength of this current market. But if we look at something like the value days destroyed, we can actually weight these big long-term whale transactions to actually see their influence in the market. So this is one of the more complex charts we have. This is, as I said, the value days destroyed, which is derived from the coin days destroyed. So for example, if I held one Bitcoin for 100 days before transferring it, it would add 100 coin days destroyed. Whereas if I held 0.1 Bitcoin for 1,000 days, again, it would be 100 coin days. So it's almost looking at the velocity of Bitcoin transactions. So what we can see is when we have these huge red spikes to the upside, indicates that not only are long-term holders beginning to offload some of their Bitcoin, but big long-term holders. These are the whales who are taking profit, usually at big major peaks, not necessarily cycle peaks, but we can see in this cycle already, once we surpassed $70,000 for the first time, we had this big red upper sell region. And in this first double peak cycle in 2021, again, we had this big red region of long-term big holders taking some profit. And in 2017, we had multiple of these. So I don't necessarily think it's purely looking at long-term holders beginning to offload some Bitcoin when we see some big whales. So as you were talking about before, the 2021 cycle was pretty peculiar. That was potentially driven by the stimulus and lots of FTX tomfoolery, purchasing paper Bitcoin and doing lots of leverage stuff. Bit crazy. So it'll be interesting to see after the cycle is concluded if we can look back and see 3 very distinct peaks and create this triple peak cycle. But I actually think this kind of price action is a lot more healthy. Again, I said before, it's kind of boring, kind of, dull to see this big choppy consolidationary range for months at a time. But this step up in price action allows investor expectations to be reset, allows new capital to flow in and feel like they're getting good value for money. If price just massively, rapidly increases, no one wants to buy an asset that's 50% higher than it was a few weeks ago because they think, well, I should have bought here. And, it's difficult to really prove to yourself that this is good value for money. Whereas if Bitcoin has been at a price, say $100,000 for months at a time, you say, hey, this is probably not a bad price to go in. Clearly, this is a floor. Clearly, we're at a point of buy pressure and some support. So maybe this is a point where I begin to really accumulate. So I actually think, even though it's kind of dull and kind of boring, this price action is actually very healthy to see.
Do you think, and Matt, by you just saying that, it reminds me of something that Michael Saylor said. He said that there's going to be no more Bitcoin winters. It's just going to be a slow, drawn out process. We won't see major drawdowns like we did in 2013 and 2014, 2017, 2018, 21, 22, where you saw respectively 86, 85, and 77% drawdowns. Do you see those types of things happening? And especially if we see like a correlation between, say, like the Bitcoin ETF, which we recently got, and then correlate that to like when the gold ETF came about. And it was the same type of thing where it just kind of kept going up with small pullbacks. And then, of course, once we had the big Great Recession, then we saw something big. But do you see something like that potentially happening? No more massive crypto or Bitcoin winters? Or do you think it's just business as usual? What do the charts tell us?
Again, so as I said before, I would love to be proven wrong. And I'd love for Saylor to be this genius who everyone hails and says, he was right. I really would. But to be honest, the thing that on-chain data is showing us is mass human psychology just quantified. And if you look at any market, any single asset class, we can see these boom and bust cycles because it's human nature. It's just human psychology to want to buy into an asset as it's increasing, fear and capitulate and just be incredibly bearish as it is decreasing. And look, what a lot of these on-chain data points show us is that a majority of investors are unfortunately wrong most of the time. So while I do think the cycles are going to be a little bit different going forward, I'm not sure if we'll have that traditional 4-year cycle influenced by the halving event where, we have this halving, 1 year to 18 months, big run up, big bear market consolidation, etc. I do think the influence of institutions and corporations are going to diminish the volatility we see, which is obviously going to dampen these big drawdowns we have. I don't think we're going to get these 70, 80% bear markets like we typically have, but I do still think we are going to get these 40, 50, 60% bear markets, which again, people don't like to hear. But realistically, at some point, the market is going to get overheated. People are going to be buying Bitcoin for prices that are probably above the fair valuation of that, and people are going to capitulate Bitcoin. And again, it's not the best thing to say, but there are probably some Bitcoin treasury companies out there who are maybe going to end up being a little bit over leveraged, a little bit overexposed to the market, and are potentially going to have to cover their positions if we do get a 10, 20, 30, 40% drawdown at that point. Because everyone looks like a genius in a bull market. Every shareholder is going to be over the moon to see stock prices rapidly increasing as they're aggressively accumulating Bitcoin. But suddenly, if these are massively overexposed to Bitcoin, they're essentially high beta leverage plays of Bitcoin. If Bitcoin does, well, not if, when Bitcoin does get this 20, 30, 40% retracement and we see these share prices down 50, 60, 70%, suddenly it's a bit more tense at those board meetings. But if we look at the realized cap hodder waves, what this is essentially showing us is retail FOMO in action. So it's similar to the hodder waves chart we showed before where we're differentiating by age bands. So for example, here I've got 3 months and below. But rather than just looking at the percentage of the circulating supply of Bitcoin that these are making up, this is looking at that influence on the realized price. So the realized price is the average accumulation price or cost basis for all Bitcoin on the network. And what we can see is as Bitcoin is massively rallying, these new market participants are paying over the odds for their Bitcoin. They're accumulating at prices which are considerably higher than what have historically been the norm and considerably higher than what long-term people who've been in the space for multiple months or multiple years have accumulated at. And these typically align with Bitcoin bull cycle peaks. And what we can see, even in this cycle, once this massively increases, when people get very excited about the ETF announcement, when people get very excited about a potential Bitcoin strategic reserve, and Bitcoin's in the headlines for hitting six-figure territory, this is when new people FOMO in, this is when the market gets a little bit frothy, and this is when a lot of long-term experienced investors begin to actually start scaling out of their positions. So when we look at metrics like this, again, as much as I would love to be proven wrong, I think it's very hard to think that our base case is that the cyclical nature of human psychology, of investor behavior, is going to change just because 20% of the circulating supply is now held by investors who probably have a slightly more long-term horizon time frame for their investments.
Well said. I think it's very hard to outrun our basic instincts, especially for humans as traders, is what they do, and the emotions get into it. Even though we want to have ice in our veins, unfortunately, there are a lot of times when we look at those drawdowns and think to ourselves, maybe this isn't it. And I like what you said about the different Bitcoin investment companies. I think at some point, maybe they look at themselves and goes, maybe we went a little bit too over our skis and maybe we shouldn't have done so much, but we'll see how that works out as time goes on. So we've talked a lot in a very short amount of time about value days destroyed, short-term and long-term, the hodl waves. But I see we got some pretty good different charts up here. One that caught my interest there is the M2 money supply, and also one of my favorites, the MVRV Z-score, and some other stuff. Can you walk us through those quickly just to kind of collaborate or corroborate what we were thinking?
Yeah, of course. So this kind of ties back into the 4-year cycle theory we discussed before. Do I think that this cycle is going to be different? Do I think that we're going to maybe break away from the 4-year cycle we've had before? One of the really interesting points is the M2 money supply, and this is the year-on-year chart. So everyone knows the M2 money supply chart. People can add a 10-week delay on it to see the lag and see it trickle down and how it influences the Bitcoin price action. But if we look at the year-on-year change in the global M2 money supply, we can actually see the acceleration or deceleration in the expansion or contraction of global M2 money. And what we can see is when we look at Bitcoin in the same year-on-year format, we actually have an incredibly strong correlation, which shows that Bitcoin maybe, as well as being influenced from the halving event and the decrease in inflationary rate, we actually have been massively influenced as well by the liquidity cycle that's not just impacted Bitcoin, but asset markets in general. Now I can see Bitcoin beginning to follow this a little bit more closely than it historically has done. And because of the reason we discussed before, the halving event, previously, if we were decreasing the inflation rate 50%, of course, we're always going to decrease the inflation rate by 50% about every 4 years. But previously, when we only had kind of 60% of all Bitcoin that will ever exist in circulation, that 50% decrease in inflation rate is a big impact. That flow, that new supply coming in is massively diminished. Whereas now there's only about 450 new Bitcoin every day, which already is being scooped up by institutional investors, Bitcoin corporations, new retail participants are just scooping that up like it's nothing. 450 Bitcoin a day, I mean, what's that between a few friends? But when we get to the next cycle and it reduces 50% again, 225 Bitcoin a day, suddenly this is pretty negligible amounts of Bitcoin. We're already at about 95% of the circulating supply that will ever exist. So Bitcoin, especially given the fact at the minute we're very correlated to the S&P 500, and again, it's one of those, I would love to be proven wrong and see this big Bitcoin decoupling where we run off, do our own thing, truly fulfill the narrative of a hedge asset, maybe do something like gold and become this narrative of digital gold where Bitcoin runs up regardless of economic conditions, regardless of traditional market sentiment. But ultimately, that doesn't seem to be the case right now. We haven't seen any sustained evidence that that is true. So I think Bitcoin is likely to continue following this global M2 money supply, especially this year-on-year chart. What is interesting recently is I've actually seen a bit of a divergence in this. So historically, again, we've seen this very strong correlation, but over the past few months, we've actually seen Bitcoin start to struggle a little bit. Even though we're at new all-time highs, on a year-on-year basis, we have actually slowed down our rate of acceleration to the upside, whereas the global M2 money supply continues to increase its expansion. So I'm hopeful Bitcoin can continue to kind of reach new all-time highs, continue to track and follow this global liquidity index, because ultimately I think that's typically where we're likely to go. And just from my personal perspective, I'm not any traditional market expert by any means, but if you look at something like the US dollar strength index, we can definitely see the trend to the downside in purchasing power of fiat currencies. We can see the US dollar continue to lose purchasing power. And if we look at assets like the S&P 500, a lot of people like to look at that and say, yeah, we're way overdue a big recession, a big global economic crash because X, Y, and Z factors. Realistically, the S&P 500 asset classes in general that people like to be a little bit more speculative on aren't necessarily reflective of the economic power of a country, not necessarily indicative of how strong economic conditions really are. They're really outlining the investor appetite for something that can provide some return, something that can provide some yield. And my argument of why that is the case is if you look at COVID, post that, 2020, everyone was locked down for multiple years. No one was doing anything. Economic output massively diminished, but everyone gets excess cash. Everyone's looking for something to put their money in, and suddenly we have a big, massive exponential rally to the upside, not just in Bitcoin, but in the S&P 500, individual stocks, global indexes, and other stocks. It really is indicative of people just wanting to get some return on their investment. And just back to what you said before, this isn't actually just the normal MVRV score. So I'll maybe show that just so we have a little bit of background on that. So again, one of my favorite metrics and one of the most popular ones we have on site. This is the market value to realized value Z-score. So Z-score is just standardizing it for its standard deviation or volatility throughout its history. What this is looking at is the ratio between the Bitcoin price or market cap and then the underlying average accumulation price or cost basis of Bitcoin. So we can actually just look at the raw MVRV ratio here, or we can, like we said, standardize it onto a Z-score. Now, one thing that I think a lot of people are looking towards on-chain metrics for is clarity on when we can maybe accumulate and when we can start taking profit on our positions. But potentially rightfully so, people are looking at the MVRV Z-score and saying, you know, we've had diminishing peaks the past couple cycles. Maybe we're not going to have a peak as high this cycle. Maybe we're not going to get into this upper red region to really give us this golden sell signal. And this is where I really like the MVRV Z-score 2-year rolling basis, because rather than just looking at all Bitcoin on the network, rather than just standardizing throughout Bitcoin's entire history, we have to acknowledge that Bitcoin as an asset class is changing. We've gone from an asset with a market cap worth a few $billion to now multi-trillion dollars. So of course that's going to change a little bit. Volatility is going to diminish. Institutional capital are going to inflow and maybe minimize the drawdowns we have, maybe cap the upside potential we have as well. But if we just limit this to 2-year or a half cycle basis, we can see that even in this cycle, we've had a peak incredibly high on this metric. And if we look to the 2020-2021 cycle, we can again see that we had a peak even higher than we did in 2017, indicating just how strong this rally was towards a cycle peak at that moment in time. So I prefer to look at metrics that can maybe adapt to the changing market conditions, and I think this is one that I'm going to be watching very closely over the coming months and potentially a year or so. It depends exactly how long we think this cycle can extend, but whenever it may be, whenever the signals start flashing is when I'll take action, and this is definitely one of those that I think is going to be very popular to watch in the remainder of this bull market.
Yeah, I have to agree. This is a new one for me. I like this one, the 2-year rolling, because it did see on the other one, the MVRVZ, just the regular. It would look like the massive diminishing returns, but this one looks like it's very standardized. I can see we could potentially have another peak, and I'm hopefully waiting for it. So Matt, great information. We appreciate it. Anything else to calm the nerves of the investors out there who say to themselves, maybe I missed everything, maybe this is it?
Of course. So it's very difficult to not feel human emotion. I mean, we've all been there. When I first got in 2017, I bought at the top, sold at the bottom. I think it's a typical story for most Bitcoin investors. I think what we're trying to do with Bitcoin Magazine Pro, and I know you have Ben on the channel a lot from Into the Cryptoverse, good friend of ours, and you have lots of other great analysts in the space. And honestly, we all are trying to provide some great educational content, but ultimately, the thing I'm trying to do, and at Bitcoin Magazine Pro we're trying to do, is just really simplify this. We're trying to minimize the amount of time you have to spend looking at charts, analyzing data, and just try and really simplify regardless of your approach. So people may be looking at this and say, you know, we're way past where we could have accumulated Bitcoin at the best risk to reward, right at the bear cycle lows. And while that may be the case, you still have the opportunity to scale in dollar cost average into your positions. And what I like to point towards is, rather than just blind dollar cost averaging, which we can see does work fairly well, I like to point towards more strategic dollar cost averaging. So if we just look at something like this, which is the short-term holder MVRV ratio, what we can see is this gives us just a very simple ratio between the short-term holders, so those that have bought Bitcoin in the past 155 days, their average accumulation price, and the current price of Bitcoin. Now, when we look at the ratio between these two, we get the short-term holder MVRV. So what we can do is if we strategically dollar cost average, so rather than just blind dollar cost averaging in every week or every month, if you put some money to a side when we're potentially at overheated conditions, then you can strategically accumulate more as Bitcoin is potentially at a little bit more favorable price. So all I did for this analysis was prevent dollar cost averaging when the short-term holder MVRV was above a score of 1.2. And what we can see is when we look at the performance of standard dollar cost averaging from 4 years ago, compared to just, again, going all in, we can see that if you were to dollar cost average in, where's the chart gone? It was here. So it was weekly, 10, 4 years. I know, very professional me just doing this on the fly. But we can see the Bitcoin performance from blind dollar cost averaging in would have been $2,090 invested and about $6,500 return. If we go back to the chart here, if you lump sum bought, you'd have had $5,859. If you came with this strategic dollar cost averaging strategy, which again is just accumulating when Bitcoin is beneath the 1.2 in the short-term holder MVRV, you'd have actually spent less money and ended up with even more Bitcoin, even more US dollar equivalent of Bitcoin. So there's always opportunity in the market. And for those that have maybe bought and are thinking, you know, I don't know if I want to take profit. As I said, I get a lot of slack for saying that I'm going to sell some Bitcoin in this cycle. I'm not going to sell everything. I'm not just going to dump all my Bitcoin on the market. I'm doing this to try and accumulate more Bitcoin. So we'll look at another quick bit of analysis I did. Now, what this is looking at is the probability of you being able to purchase Bitcoin at a lower price. So again, this is a slightly more complex topic, but essentially all we need to look at is this red line here, the 365-day moving average, the 1 year moving average. So if we look at any given day above this 1 year moving average, if we were to take profit as sell at any point during that, throughout all of Bitcoin's history up until the tail end of the less bear market, you'd have had a 50-50 chance of being able to buy in 39.5% lower. Now that sounds crazy. A lot of people are saying, you know, this time is different. This is a super cycle. We're not going to get these bear markets. Sure. We are definitely going to get boom and bust cycles. And if the data is anything to go by, you have a coin flip chance of being able to buy in 40% lower. Now this is, again, any day above the 1 year moving average. If you're looking for confluence, if you're looking at on-chain data, macroeconomic data, treasury company accumulation, technical analysis, derivative data, if you're putting these all together to give a clear picture of where the market could be going, then you're going to increase the probability of you doing this even more. And I know we're Bitcoin Magazine Pro, so everyone thinks that I'm just a big Bitcoin maxi and hates everything else. That's actually not the case. I did this analysis on altcoins as well. So this ticker on TradingView is total 2ES, so it's excluding stablecoins. You can remove the 1 year moving average. At any point throughout an altcoin's history, you can sell, and there's a 50-50 chance you can buy in 48.4% lower. A coin flip's chance of being able to buy in nearly 50% lower than the price you paid or the price you sold at. So even if you haven't bought in yet, there's always opportunity. There's always favorable risk-reward opportunities in the market. Don't just blindly buy, don't just follow anyone. Look at the data, simplify your process, and just accumulate strategically when it suits your investment decisions. And then when it comes to selling your position, again, you don't have to sell 100%. No one advises to buy 100% of your position at a bear market bottom because it's incredibly difficult to do. Yet it's even harder to sell at a bull cycle peak. Yet everyone thinks that they can just sell 100%. If you can just granularly scale out, you have a fairly decent chance when all of these metrics point towards a bull cycle peak occurring of being able to scale in at more favorable prices. And that's how I'm trying to accumulate more Bitcoin using my Bitcoin, because the only thing better than Bitcoin is more Bitcoin.
This is very true. And then Matt, before I let you go, can you go back to that one chart where we took a look at, it was, I think it was the MVRV, and you took a look at less than 1 or over 1. And it's a pretty good way to what I would call dynamically DCAing, essentially, which I like.
Was it the short-term holder one? Sorry.
Yes, this one right here, as a matter of fact. My question is for this. This is for the lazy people out there, including myself. I remember you guys used to have some type of alerts that would come in. Hey, this is happening right now. Check out this chart. Hey, this happened here. Does the company, there's a Bitcoin Magazine Pro, do they have an alert that comes in via email, through browser, through messaging that states, hey, this level is at the optimal?
Wow, Rob, what a great sales pitch you've pointed me towards. So, of course, I'm going to be honest. I do this every day. It's my job. I'm technically a professional because I do this as my day job. But realistically, I'm a little bit lazy sometimes. I just look at the alerts tab here because if you are like me and sometimes you don't want to have to scroll through 150 different charts and 150 different data points, you can just go onto Bitcoin Magazine Pro. You do need a site subscription, I'll be honest, it's not free. Yeah. You can go through and you can just tick these on. You can just say exactly when you want to know, when is the MVRV score hit X value, when has the active address sentiment indicator. Lots we didn't cover, we have 150 charts, we have loads of things here. But if you implement something like this, again, you just get an email to say, you know, we may be at a point where the market is potentially overheated and maybe due a pullback. We may be at a point where you can maybe get some more favorable accumulation prices for your Bitcoin. So if you were to just focus on something like this, again, it acts as almost a moving level of support and resistance, almost like a 50 or 100-day moving average throughout bull cycles. If you were to just accumulate when Bitcoin was beneath this moving average, if you were to able to clarify, yes, we are in a Bitcoin bull market, we're above the 1-year moving average or 200 weekly, for example, the MVRV score has significant upside potential, then you can just look at a very simple metric like this, and again, strategically dollar cost average in, just start aggressively accumulating once we get close to this value of 1, and maybe start scaling out when we get levels of 1.3, 1.4, 1.5 or above. You can see, I don't know if you can see if I'm drawing on the chart, I'll give it a go. Are you able to see that?
I can't see the drawing, but I can see when you would click over things and highlight.
Okay, yeah, fair enough. So this local peak, what you can also do, it's something we've done before as well, is you can almost draw bands around this. In fact, if you give me 1 second, I'll show you this. So if we go quickly to the short-term holder realized price, so this is using the Bitcoin Magazine Pro API, what we can see is the 1.33 level, sorry if it's not the easiest to see, the 1.33 on the short-term holder realized price actually typically acts as a pretty strong level of resistance. They're almost like Bollinger Bands, but based on the cost basis for new market participants. So that's this yellow line here. And this is currently set at around $140,000. The upper one, which is 1.66, which has typically been major cycle peak points, is currently sat at around $175,000. And then to the downside as well, if you're looking to accumulate, typically when short-term investors have lost about 33% on their cost basis, which is this red line here, such as when we bottomed out in the 2019 bear market, when we hit the COVID bottom, most recently in this cycle when we bottomed out around $15,000, it didn't quite hit it, it did previously when we first hit $20,000. Then again, you can have a very simple way of seeing how the market is likely to react when we're over or underextended. And again, this isn't anything fancy, it's just human nature, it's human psychology. When people get to X% profit, they're taking screenshots on their crypto exchange app, sending it to friends, telling you should have bought more. They're choosing the color of the Lamborghini when we get up to the green one here. But it's very predictable. It's very pattern-like. We see very similar patterns throughout not just Bitcoin, but all market classes of people getting euphoric at market highs and very bearish and capitulating at market lows. So as I said, we're just trying to quantify human emotion, human psychology. We're trying to do it simple just to save you time. Of course, if you can make more profit, that's great. But realistically, we all just want more time. I want more time to be outside in the sunshine. I mean, I'm in England, so there's not too much sunshine here, but just enjoying life with friends and family. And these tools help me to do that.
Yeah, and it's like I said before, the guy with the least worries at the end of the day is the winner. So just remember that, everybody. Try to use the most advanced tools that you possibly can. Now, Matt, that was great, but I have to preface it with one thing. That was a little too smooth, how we did that interview. That was very smooth, and it looked coordinated, and it was not. Matt, how many Bitcoin did you pay me to come on this show and talk about this, about Bitcoin?
Honestly, it's just, it's a weird thing. You know, when I started doing the YouTube things a few years ago, it was, and I'm sure you were the same, I think everyone's the same. You first get in front of the camera and it's difficult and it's crazy. But I mean, even in the past year since we rebranded from Looking to Bitcoin Magazine Pro, now it's at conferences, meeting great guys like yourself, doing discussions and presentations with Ben and people from Fidelity and all these big names in the space. You kind of become unconsciously competent, I think is the right term for it, where I don't even know what I'm saying, it just kind of naturally flows out. So if anyone's wondering how much Bitcoin I paid Rob, well, let's just say I think he can get a bigger pool in a few weeks' time. But yeah, I like to think it did flow nicely, and it's been great discussing this with you.
Yeah, it has. And just to preface it, 'cause I know I'm going to get this in the comment section, there was no payments whatsoever. I just don't want people to do what I do, which is round trip the bags and then get stuck short and then go to themselves, what happened to the super cycle? So I just want everybody to make sure they get the best information they possibly can and make the best decisions they can as they move forward, because again, at the end of the day, it's not how much you make, it's how much you keep. And that's really going to come into a big factor moving forward. So Matt, I appreciate you coming on. If you're looking for Bitcoin Magazine Pro, there'll be links in the description, and there'll probably be a discount somewhere, I'm sure, and we'll go from there. But Matt, thank you so much for coming on. We appreciate it. We'll have you on again.
Amazing. Thank you again so much for having me on. I know you get some big names on this space. You're a huge channel, so I really appreciate your time. I'm hoping we can catch up again in person again in the not too distant future.
Absolutely. All right, everybody. That's it for this one. Let's jump back. And that's it. So I want to thank Matt for coming on and explaining those things. We're going to have Matt on later on in the year to see where things are going. But if you would like to take a look at Bitcoin Magazine Pro, there are many options to get access to it. But if you use the code D.A.N.20, it'll give you 20% lifetime discount, whether that if you're going from month to month or if you're going to go annually. All you got to do is just put in D.A.N. 20, click apply, and it'll be set there and you'll have access to Bitcoin Magazine Pro. But that is it for today. So if you like today's video, give it a thumbs up, consider subscribing. Everything we talk about is very time sensitive. But that's it for this one. Thanks so much for stopping by. I appreciate you, and I'll see you on the next one.